From the News Channel 5 Network, this is MorningLine.
Good morning. Welcome into MorningLine. I'm Rebecca Schleicher, filling in for Nick Barris today, who is still on vacation. Hope he's having a great time. With the end of the year coming up, this is the best time to start thinking about your taxes and maybe getting just some last-minute things in order. And here to help us this morning, taking time out of her busy day, Dr. Friday, thank you so much for joining us.
Thank you for inviting me.
I am so excited that you're here to help us navigate, because this is kind of a weighty topic, especially if people, unlike you, aren't dealing with taxes every day.
Exactly. Trying to have me repair my car would be the same kind of situation.
Right.
And most people, they don't know what to expect when it comes to taxes, and everyone's always fearful of audit, right? Oh my gosh, the IRS might audit me or something like that. So it's definitely a good time of the year for me.
Well, and I know there's probably a lot of people who haven't really started thinking about it until right about now.
Well, we'll be lucky if they're thinking about it right now. It's more like March 30th, 15 days before April 15th, and that's when they're thinking, oh my gosh, I should be filing taxes.
Right.
What do I need to do? So anyone that is actually thinking about it now, I'll give you a thumbs up, because we can actually make a few changes, right? I mean, now's the time that, let's say there's actually many people that get paid bi-weekly. There's a 5th paycheck in the month of December. If you don't really need that, if that money could go towards savings, you might be able to contact HR and say, hey, I want all of that to go to my 401k. That would put you possibly in a lower tax bracket.
Wow.
Which means the overall income, you could be getting, dollar for dollar, you could be saving, 30% on what money you set aside if you're in the higher tax bracket. So something as simple as that. It could be that maybe you don't normally itemize, and what we like to do is every other year. Some people, they're just on that border, especially if you're married, you have almost $13,000 you have to have before you start itemizing. So that means you have mortgage insurance, property taxes, and contributions are the main contributors to that number. You can pay your property taxes twice in 1 year, January and again in December. Most of us have received our property tax number. So you could actually send that check in for 2016, and then that way every other year you'll actually itemize. Otherwise, you kind of pay the taxes and stuff and you don't get a lot of credit for it.
Interesting. And I know a lot of people are just kind of going through their closets and doing Christmas shopping and things like that. So those last-minute donations,
contributions, taking it to the Goodwill on December 31st instead of waiting till the first of the year is a great plan. But make sure you make a list. If you ever get audited, it's an area in which they will audit. I mean, somebody putting a bag of sweaters doesn't really help us.
Oh, I know.
We have no idea what's a bag of sweaters. Is it a big bag, little bag, grocery bag? And so you really do need to know, medium used, 12 sweaters, this kind of thing, so you have that. And there's even on my website, but you can go to the Goodwill website, they have a little thing that'll tell you how much the IRS actually considers that as a dollar amount.
I'm so guilty of that. They hand you the receipt and you just kind of take it and it's empty.
Exactly, exactly. And I'll have people have those in they have their nice packets together, and they'll have 2 or 3 of them. And I'm lucky it has the date on it, and that's about it. I'm like, I need more info. What am I supposed to do? So yeah, it's very important to fill out that form.
And so, if you do donate gently used clothes like that, I mean, it's not like you get the full...
You don't. I mean, let's say you have a sweater, and the sweater is gently used. You probably, even no matter what I paid for it, it may be like $10 that the IRS. And nowadays, I understand Goodwill also does have an online electronic contribution, so you can go through, put it all in, and then you basically keep that. That would be wonderful. Please do that.
Great.
But yeah, that's the way it kind of works.
As many things as you can actually have a receipt for and actually have documentation for.
The IRS is kind of funny about receipts,
Right.
I mean, and your tax person should be as anal about those receipts as the IRS, because when it comes down, it's going to be 2 years from now when they're going to ask you, what did you contribute? And you're going to be sitting there going, really?
Right.
I have no idea.
Yeah. So a lot of times, I know also the holiday season, a lot of people are getting engaged or getting married or having big life events. A friend of mine just had a child. So these are all things. Yeah, they affect your taxes though.
They do. The best things are when you do have a baby or you get married, because you're usually adding somebody to your tax return. Now, it can be a penalty when you get married and 2 people are working, because when you were filing as a single person, you had your own tax bracket, but now if you married, which I think you are, your husband's income is added to the top of that. So now you're in a higher tax bracket for the second person's income, where they were on the same tax bracket when they were single people.
Interesting.
So Very important. I mean, I know people are saying, well, there's so much going on, but you might want to talk to your tax person to find out, because if you get married in December, remember that means that the whole year you are going to be considered married. You can't file single because you're 11 months unmarried and 1 month married. And if if one person was normally getting a big refund and they hadn't maybe having enough coming out, you may be getting a little gift from the IRS, it's known as a love letter, or a bill saying, you know, you owe money at this point. Not exactly how you want to start your marriage out. Now, a baby's always good news. As far as I'm concerned, that's always an additional tax deduction.
Okay.
Divorce can be worse, because divorce, a lot of times people are claiming married and 2 on their withholding, and they divorced before the last day of the year, and now they're single and 0. They're at a higher tax bracket, have no dependents. Now you've got another love letter with collections going about.
Interesting. Okay, so yeah, I'm not married yet, I'm engaged.
Oh, okay.
So you're saying I should be planning my wedding based on
January 1st is awesome. Do it in the first of the year, that way we can have plenty of time.
Darn, we're planning on fall, so
oh man,
too bad. I'll have to call you up for some help with that.
Tax plan.
What are some of the mistakes? I'm sure you're seeing people coming in, and especially when we get more into tax season, you'll see a lot of people coming in. What are the just common things that you see people doing over and over again?
A couple of mistakes is, for example, not using you as an example, but someone gets married, they don't change their Social Security card for their new name, but then when they come in, Mr. and Mrs. Smith, whatever, and therefore when you e-file, it will be kicked out. You won't be able to e-file because that person's name doesn't match the Social Security system. And now with e-filing, there's a matching system going on. So that's one thing. It's just making sure that all the name, whatever you turn in, you can always file as Mr. Smith and Mrs. Joan, whatever, but you need to have right names with the right Social Security cards. The other thing is children. Nowadays, there's his, yours, ours, whatever, and that will tell you right now, people, if you are claiming a child, make sure that both parties, because what happens so often, first in is how it works with the IRS. So let's say you're divorced, your ex has the children, she gets her taxes in January, you have other issues and you don't get them until March, but you were supposed to be able to claim them. Now you've got to fight with the IRS to get your money. That person's going to have to go back and file. And then you have to prove, there's a lot of proof that proves that that child's truly yours, even though the birth certificate could have your name on it. The IRS doesn't take that as it's your child.
Wow.
So I'm just saying, document medical records, school records, keep those kind of records so you can prove that your address is on the paperwork that the child is actually living with you for more than 6 months a year.
And I would imagine if there is a discrepancy like that, it probably takes a very long time to sort out. You've got it.
We've got cases taking almost 2 years to resolve.
Wow.
Yeah, and that means no refunds, means each year it can add to it, because we've tried to file an extension so you don't have a second tax year that you're having that same argument with the IRS, because once you're kicked out of the earned income or child credit, you've got to get put back in by the IRS.
Interesting. All right, we've got Sybil right now calling in. Sybil, good morning to you.
Good morning.
Good morning.
What's your question?
I was trying to listen to the answer that you just gave, but I have a son that's a senior in college, and he left in May to do an internship in East Tennessee, and from there he went August to do an internship with Apple in California. So I think I know the answer. I can't claim him because he was only with me 5 months. Is that correct?
Not necessarily. College students, there is a little exception to the rule, because obviously they go off to university, they're not physically living in your home, but they can still be your dependent. The question would be more with these internships and the new law that says we have to pay our interns,
right.
Then is he making more than the $6,000 that the IRS would consider your deductible? He may, depending on how much, the means test, are you paying more than 50% of his care throughout the year, meaning, you know, car insurance, medical insurance, all the things that you might have coming out of your pocket? That would be the biggest question.
All right, well, thank you for your question, and we're going to go ahead and take a break. We'll be right back.